This is 9:15 a.m. on Friday the 1st of May. I'm sending this video, or I'm creating this video to show what I believe to be the start of an actual pullback in crude WTI after the recent up move. Using my proprietary tool that I created, we'll see that all price up move has been contained by this last swing down over here. To create my market map, this swing here has contained all price. We'll see that at each level, as price started to move up, it was held at each one of these lines. Once it broke one, it went up to the next one. Support becomes resistance, becomes support. We can see that each one of these lines intersected, held price. Once it broke through, it went to the next. Same here. We got to the half angle of the velocity of the move down. We got to the 2.5 angle, and we were into the third angle. So we've got a stopping point there. So if I just I'll take that off. So that's one point of confluence. Additionally, we have 3 drives to a top. So we'll see that each one of those swings taken into consideration brings us exactly into the same point that the third angle was at. Also, we have Fibonacci confluence from this swing here. We have a 127 extension. Now, on each of these points, we have a shortening of the thrust. We had a large up move there, even larger there, and the very last one, with a lot of effort, failed to produce much more of a significant high. Now, additionally, we've had actually five legs in accordance with Elliott wave. Leg 1, 2, 3, 4, 5. Now, additionally, I actually will have a square out timing. So this move here took us into this high. And the same move here takes us to the edge at this point. Now, if I bring up a 240, we will see that we've also got the drives are clearer at this point, but we've also got a butterfly completion pattern, which is often the final part of a move. So we will see that this last swing was also a 127, as I just shown on the daily. This swing here was the top that we made here. The swing that I was alluding to, that was actually the completion. Sorry. Was this one, and as we can see, the reason for the timing on that this swing gave us the timing, because once that swing was done, it brought this lower bottom, or it brought the actual bottom, which is why we were able to anticipate the next move in advance. So we'll see that we made the breakthrough for the high here. Now if they were going to continue to higher highs, we should have had a continuation at that point. So now the next part will be to manage this trade. And expectations of targets. We'll see this held price. There, there, there. Made the final thrust up. We've now opened below this. So I'll look for a continuation to the downside. An actual pullback in the region, going back to the daily. As this is a 127 extension, oftentimes, so this is the 127 extension there, the market will like to contract oftentimes back to the 786 of the last swing, which would actually bring us back down into the 48.89 area. Now on the weekly, we'll see that we started this move up and that the map held all price action so far. I've just removed that so we can see the price action. As we came down, held price action until it closed above, went to the next one. We're struggling at this point. The continuation should well be up to the next one if there was no, or if there's congruence in terms of what goes on. But as I say, whilst I do see that this is the actual bottom, or I do feel that this is the actual bottom, as I'll next show on a monthly, I do believe that we are actually now due a correction. Maybe not all the way back to the 786. I would at least expect a retest of this area here, the 50% pullback. But the velocity of this move, once I pull the map, will show us where we will actually pull back to. I'm recording this video at 9:37 on May 1st, 2015. I am looking, well, I'm already short in crude WTI and expecting a pullback. We're currently looking at the daily chart, and I will show that we have multiple points of confluence to give me the reason to think that we're actually going to pull back. So this is a daily chart, and we'll see that we've had a recent up move back from the 3rd or the 18th of March. However, since that point, we've had a double bottom. Prices look a bit tired at the moment, and I expect a pullback. So utilising my proprietary tool, we'll see that all price recent action has been contained by this last swing down here. Pulling into this first low, we'll see that every price move from that point has adhered to this actual map that comes from this first swing down. So initially we get condensed prices. Once they open above the descending angle, they move to the next one. Resistance becomes support, becomes resistance, becomes support, becomes resistance, open above to the next one. Contains price until we open above. As the distance between the lines expands, so does the moves. We'll see we have a half angle here, and open above, go to the next one. Now currently price is up to the third angle here, which has been the exact high there. So that's one point of confluence. Now I'm going to bring up another chart of the daily once again to show something else for the point of confluence. We have measured moves, 3 drives to the top. So this is the first drive, second drive, third drive. You'll see that the top also coincides with the top, which was the third angle. From this first swing up, the first impulse leg, we will see that the top here is a 127 extension, or the yesterday's high, I should say. It's a 127 extension of that. Additionally, the timing of this leg here was for the first high, and this second attempt here brings us in at this point. So there and there. So we have the swing square out timing. Now if I bring up a 240 chart, it's also evident that we've had a shortening of the up thrust, showing a slowdown in the aggressiveness of the move. So from high to high, we had a high. That's an obvious increase in the actual thrust. Once again, we had an increase. Then the final high was a lot of effort and seemed quite laboured. And as we can see, there's an obvious drop off in the velocity of the move up. Now, additionally, as is often the case at tops or interim tops, I'm not saying that we're going to pull back all the way down, but we have a butterfly pattern. Once again, we have a 127 extension from this high, from the pullback to here, and we have a measured move ABCD pattern creating the butterfly 127. So A, B to C, C to D, and this is the butterfly pattern. So we have multiple points there. Now if I just bring another chart across, this shows wave counts in terms of, this shows volume on each move up. So on an hourly chart, we can see that the top preceding yesterday, we had 1975 contracts on this hour, on this swing up on the hourly. It was then 155. We pulled back. This was the second biggest pullback. We didn't break the lows, but we had 728 and 660, which showed a potential change in direction. Now, as we approached and made new highs yesterday, we went up on 769, then 95 and 73, so a considerable drop from the higher highs. As we extend that out, we have started to pull back. So this shows a possible culmination in volume, and on a 120 minute, it's even more pronounced. We'll see 1975, and on 1230, they could barely break the highs. So this is an indication of distribution which precedes a move in the opposite direction. Then we retested on 57. I mean, even though this was overnight, this was a significant difference. So there's multiple points of confluence there. So therefore, my expectation will be that just even to tempt remove. As this is a 127 extension here to here, expansion in the market often provides, more often than not, provides the inverse contraction, which would in most cases take us back down to the 786, which would be into this level, down at 48.89. Now obviously this is a daily chart, so the time frame for that dependent on the last swings. So using these as timing. Could possibly take us all the way into June 8th. Now that's just using one of the most prominent swing on the chart as we see it there. However, we could actually cut that distance in half. So either way, just from what's gone on, it'll be more evident once we actually start getting a move underway. But we can see price has been contained in this channel here. We'll need a break of the channel, for which I will use the map once again. But my expectation would be that we would pull back to a minimum of this 50% area. Which is at 52.87, so about $6 off of where we're at now. Although, quite possibly, we should be seeing the $50 again. $50 again. So I will update as the move gets underway. Thank you.